All right, so today I wanted to make a video on the earnings from the last week. I was away the last week, so I never got a chance to make a video on the earnings from last week. But this week was probably the busiest week. In fact, it almost certainly was the busiest week. We had 4 of the Mag 7 stocks release and several other very large companies. So let's get right into it here. As far as the market this week, we didn't close it I think we did close very close to an all-time high, and we did touch a new all-time high. We're very, very close to 5,000 on the S&P. I think 4,975 was the highest we got, so within striking distance of 5,000 on the S&P. Again, we did have a very, very rough day on Wednesday, it would have been, or was it Thursday? I don't even remember. This was after the Fed announcement. Basically, a couple reasons that there were some concerns. Number one, the Fed was more hawkish than people expected, and number two, we had another little flare up in the whole regional banking sector. So those are the reasons to be bearish. But if I'm being honest, I think it probably was a little bit too optimistic to expect the amount of rate cuts that were rumored to be in play. So I don't think it's overly surprising for the Fed to be a little more hawkish than people expected. So in my opinion, I still think we're going to close higher on the year. I still think it's going to be a solid year, although we will have a correction at some point. Now, nobody knows when it's going to be. Nobody knows how deep it's going to be. So sitting out in cash until that happens is not a good idea, in my opinion, because we easily could have another year where the markets are up 20%. Like, that easily could happen. And again, a lot of people say, okay, we're going to have a correction at some point, which is true. The problem is, number one, no one knows when it's going to happen, and number two, no one knows how deep it's going to be, right? People might say, oh, I'm going to wait for a 10% correction and then get in, and wouldn't you know it, the market goes down another 10 or 20%. Or it's possible we don't get a 10% correction, right? So in my opinion, the best strategy for the average person is always just to dollar cost average good companies that have a good valuation, right? That's my opinion, right? So again, that is the market from this past week. Getting right into it here, in no particular order here, just how I wrote things down. Tractor Supply, again, this is a company that I would like to get a position in, but I never have, just because I'm waiting for a good price. They beat earnings but missed revenue. Again, this is kind of a common thing for a lot of companies, as we will see. Again, it actually is probably about fair value where it's at right now. I want it to be a little bit cheaper. Honestly, if it went below a price to free cash flow of 30, that's when I probably would seriously start to get in. Preferably, I would get it a little bit below that. But I think that this is a really solid company, in my opinion. The next one is Quest Diagnostics, DGX. They beat earnings and revenue. Again, another company that I think is interesting to keep an eye on. Again, they certainly do have some issues as of late, and they are expensive based on their historical valuations. So this one's one to keep on a watch list, but I kind of doubt I'll ever buy it. ARE is the next one, Alexandria Real Estate. They beat earnings and revenue. This is another one that I do hold. Very small position. I think it's a solid company, in my opinion. Again, they haven't grown very well, but I mean, if you look at their current valuation, it's a lot cheaper than where it historically has been. So again, you're not going to see the growth. You're not going to see a ton of growth, but I think it is kind of cheap, and that's why I do have a small position. The next one is SoFi. Again, this is one that probably won't ever buy, but I think it's kind of an interesting one to watch. Again, beat earnings and revenue, and they finally did become profitable. If we look at their valuation, they are actually, because they just became profitable, they don't actually even have a current valuation. So we're going to have to wait and see exactly where it is. But again, my guess is that they're still probably a little bit expensive. The next one, again, Google, the first of the Mag 7 stocks. They beat earnings, revenue, although they did miss cloud revenue. Again, this was, I think, the same thing for Microsoft. So this is one of the things that scared the market a little bit. But honestly, I don't think that these were that bad of earnings, and I think that's probably why the market went right back up the next day. And that, again, when they announced these earnings, we had that a really bad day. I think this was Wednesday, and next day a nice up day, and then a nice up day again on Friday. So it's going to be interesting to see how the market reacts for this week, next week, and so forth. But I mean, honestly, Google is below all of their historical 5-year averages on PE, free cash flow, and price to sales, even though it's very close to, if not basically at its 52-week high, or an all-time high even. The next one is Microsoft. Again, they beat earnings and revenue. Again, I think they missed one of their cloud estimates. So again, they kind of had a similar reaction to Google. But again, this is another company that is basically at a 52-week high. Again, it is certainly expensive where it's at, though. Again, a price to free cash flow of 45 is way too expensive for this company, especially how big they are. In my opinion, it's going to be almost impossible for them to grow into this valuation. So this is one I definitely would not be touching where it's at right now. Google, possibly. Microsoft, definitely not. Next one is AMD. Again, earnings per share were flat, basically. They did beat revenue, which was good. The stock went up on that news. Again, they are still too expensive for my liking, and honestly, they're not. They're way too expensive. And they're not even growing very well, at least at the moment. So again, I would definitely not be buying AMD anytime soon. Littelfuse, LFUS is the next one. Earnings per share and revenue are flat. This is one I do have a small position in that I do like to watch. Solid company in my opinion. Definitely one to keep on a watch list at the very least. The next one is Skyworks Solutions. Again, this is another one that I have a decent sized position in. They did beat earnings, although they missed revenue. Again, this is a company that's actually a little ways off. This is one that is a little ways off. It's basically a little below their 52-week mean or average, whatever you want to call it. The highest they've been is 123. They're currently at 101. So I do like this company over the long run. I think they got a lot of room to grow. And again, they have a price to free cash flow of 10 right now, a PE of 16. So if anything, I think they're cheap where it's at right now. I would be buying it probably up until 120, 130. So again, just my opinion there. But this is one of the companies that I am more aggressively dollar cost averaging right now. The next one is UPS. Again, probably never will get a position, but it's a good barometer on how the economy is doing. Earnings per share were flat. Revenue and net income were both down. So I think this is also one of the reasons that the market was a little bit spooked. The next one is ADP. Again, this is another one that I think is also a decent barometer on how the market is doing. They actually beat earnings and revenue, so they did pretty good. This is a company that I do have a position in, and if I see a good-sized correction, I definitely would be adding to that because I think that this is a really good company. And honestly, this company is going to follow basically how the market is doing, right? I mean, they're basically how do you describe exactly what they do? Business outsourcing, cloud-based human capital management, right? So I mean, essentially, the better the economy is doing, the better this company is going to do, right? Essentially. The next one is ALG. This is Align Technology. Beat earnings per share and revenue. So again, this is a company that I might get a position in someday. Although, again, I want to get it at a good price. It is actually below all its historical averages, but I think it's still a little expensive where it's at right now. So again, a good one to keep on a watch list at the very least. CP, Canadian Pacific, Kansas City. I think they actually merged Kansas City Southern in them. Again, they easily beat earnings and they also beat revenue. So again, I think that this is a solid company, but again, they're too expensive where they're at right now. So again, one to keep on a watch list at the very least. The next one is Evercore. Again, beat earnings and revenue, although they were down year over year. So again, that's something that's a little bit concerning, but this is a solid company in my opinion, at the very least. MasterCard, again, another good barometer on how the economy is doing. I do have a small position in this. They beat earnings and revenue fairly easily, I believe, even. So, again, good news there. Old Dominion Freight Line, again, another one of my favorite companies. They beat earnings and revenue, again, which is good news. If you look at their historical valuation, though, they are very expensive where they're at right now. So, again, I would wait on this one if you're looking to add a position. The next one is Qualcomm. Again, another company that beat earnings and revenue. Again, one of the bigger chip makers out there, one that's been around for a really long time. Again, not a company I own. I probably never will own them. But again, I believe they're one of the bigger companies in the NASDAQ. So, again, they're definitely going to have a little bit of an impact on that. Thermo Fisher Scientific is the next one. Beat earnings and revenue. Again, another company that I would get a position in someday, possibly, but I would want to get them at a very good price, which honestly I don't know if that ever will happen or not. So again, we're just going to have to wait and see on that. The next one, again, and the next two are both going to be two in the Mag 7. Amazon. Again, Amazon actually basically I think they did hit an all-time high at some point this week. They easily beat sales and earnings per share, which obviously is why. Amazon, I think Amazon and Apple are probably the best of the Mag 7, in my opinion. Google, I think you can make a strong argument for. Microsoft is good. They're just too expensive. Nvidia is good. They're just too expensive. Facebook or Meta, again, I think that they're solid as well. I don't follow that Facebook nearly as much. So again, I'm not as up and up on them. Again, if you look at, we already talked about Amazon, Apple, beat revenue and earnings. Again, Apple, I think, is actually in a slight correction right now. Let's check and see where they're at right now. Yeah, so their 52-week high is 199. They're currently at 185. So again, like I said, honestly, I think Apple's probably the safest of the Mag 7. I think that their name brand, their product lineup, I think it's pretty much second to none. Although again, they are expensive based on their historical averages. So I definitely would be waiting for a pullback if you do want to get into them. MCHP, Microchip Technology, again, one of my favorite stocks. Beat earnings, but they did miss revenue. Again, that they were down a little bit on the week, so again, that's a little concerning. But honestly, if you look at their historical valuations, again, price to free cash flow of 14, PE of 18, right? I mean, those are both significantly below their historical averages and by no means expensive. So again, I think you certainly can be buying them where they're at right now. And again, there's not a lot of stocks you can say that about right now. So again, just my opinion, but obviously do your own research, but just my opinion there. And the last two, Exxon and Chevron, both beat earnings and missed revenue. Although the good news is the oil companies doing better than expected is good news, at least if you're an optimist, right? If you're pessimistic, then obviously that's bad news. But if you're optimistic about the economy going forward, that is good news. Because again, if we're going to see a recession, you're probably going to start to see these oil companies, their earnings suffer because, again, obviously recession, people aren't driving as much, not as much stuff is being moved around, i.e. less profits for the oil companies, right? So, again, that is good news if you're bullish on the economy. And, again, that's one of the reasons why I'm thinking that I don't think we're going to see a major correction, at least anytime soon. Now, again, obviously something can change basically overnight. You never know. Right? You never know. We could see a banking crisis, housing crisis, you name it. Something that's completely out of the blue that easily could happen. But again, if I'm betting money, I'm still betting on the market going up from here. Now again, we could shop sideways the whole rest of the year and close up like 1%. My guess is that we have a modest up year. I would say maybe 10 or 15% if I was forced to bet, if I had a gun to my head. That's just what I would think. Now again, anyone's guess is as good as mine. Again, I'm not an expert. I'm just a guy who loves following the stock market and the markets in general, right? So again, obviously do your own research. Again, like I said, I think that the Fed being more hawkish than people were expecting. That's something, to be honest, we probably should have expected, because the inflation prints still are not at where they want them to be. Now, again, if you look at the trailing 6 months, 8 months, 9 months, they are. But again, they want to see a year. So again, that means that we're probably going to have to wait until April or May, possibly even June, before we get rate cuts, barring something crazy between now and then, right? So again, that is what I take away from the markets this week. If you liked the video, please like, comment, subscribe, and stay tuned for more.